Alright, good morning. Let's go over today's trade plan. So in the overnight session, we saw that sellers were active at that 25 to 27 half zone, and we got a pullback to the 14 to 16 half support, and 16 ended up being the overnight low, finding buyers at that level, and then shooting back up towards the 25 half to 27 half. So at this point, the market is set for a directional move, but in order to get an upside breakout, ideally we want to see the market holding above 20 half to 22, which is the pre-market support, and that zone can be used as the micro bull bear zone off the open. The catalyst we have today, in just a few minutes, we have industrial production out at 8:15 Central, and then consumer sentiment at 8:55 Central Time. So that being said, the way the market is set up so far, we've had a pretty decent move to the upside. We're balancing at the highs, and with NQ having already made a new high on the year, we're still giving edge to the buyers. And the upside target, the high odds target, is the 31 to 33 high volume node, and above it, 34 to 35 half is resistance. So, first test of that entire zone, either, the high volume node or the 34 to 35 half area, can attract responsive sellers. We can get some profit taking over there. But, as far as the idea in the early morning off of, consumer sentiment and just off the open, is really that the S&P ideally holds 20 half to 22, and then we get a breakout and we go up and test the high volume node and initial resistance. In the event that it's a strong breakout, and by that I mean a pretty decently rising AD line, tick holding above zero, good volume, the other markets participating in the move. If all of that is present, then even a move to the open gap at 38 half and the naked VPOC at 39 quarter would not be out of the question. That is possible on the day time frame. So, for that reason, we're not looking for short setups at 31 to 33 or even 34 to 35 half. Now, that area can attract responsive sellers. It is resistance, and we can get profit taking there. So it is a good spot to take some profit. If you're long into that zone, it is a good spot to exit either part of your position, or if that's your all-out target, that's perfectly okay too. But as far as shorting it goes, that requires reading the market pretty closely in real time, and if there's a very specific reason for shorting it, if we see where the momentum is not quite the way we want it to be, or if we're getting kind of just mediocre tick readings and we think that this zone is going to hold at least short term and it can give us a decent move, then it might be worth it. But keep in mind that you're going to be breaking out above 27 half, so your first target on the downside is probably going to be around 27 half or 28, and that's why the reward to risk at the 31 to 33 is not ideal. And it would have to be a very specific scenario where we would short it. But given how strong the market has been, given that NQ is at new highs on the year, I'd rather just focus on the long side again, unless we fail to break out, right? Unless we fail to hold above 27 half, then there could be a better short setup available in the market. But if we break out and things are looking like the strength is certainly continuing, then we probably want to be cautious. So that's the idea on the upside. On the downside, the 20 half to 22 is short term, heading into the open. It's support, and holding above it would just tell us that this market is still relatively strong. A break below it would be a red flag, but buyers can still maintain control above 14, 16 half. We could simply be in a wider balance if we break 20 half to 22. But like I said, the ideal scenario is that buyers hold ES above 20 half to 22, and we balance within this range, and then we get the breakout up to 31.33, 34.35 half, and perhaps, get some rotations off those zones, and eventually perhaps head up to 38 half, 39 quarter, and then get a sell response over there. On the downside, if 14 to 16 half goes, 11 to 12 can still attract buyers, but at that point, at least we would know that the market is not as strong as we anticipated, and even a break below 20 half would tell us that the market is not as strong as it was shaping up to be so far. So we would have to be careful. We would have to be cautious, but even 11 to 12 can attract buyers. But at that point we'd have to be careful. We'd have to look for some signs in real time to take the trade. Trade location at 11 to 12 still provides edge, but we would just have to be a bit more careful on the long side. And if we break 11 to 12, that could result in a reversal. That could indicate a failed breakout attempt, and that could shift control from the buyers to the sellers. So personally, I'm not expecting that scenario, but we still have to be prepared for it. By default, we're going to give edge to the buy side, and we're only going to shift our view and our bias when the market provides some clear signals. And until then, I think we still have to give edge to a upside move, but we are open to the possibility if 25 half to 27 half doesn't go, or if we get a strong failure there, and we break below 20 half to 22, then we'll be a bit more open to the downside scenario. But until then, we have to give edge to the buyers. So that is really the main idea on the day. Overnight we're running a little bit below average volume. Let's see if that picks up, into the cash open. If it doesn't, then it would just tell you that the range could be a bit limited. That's about it. We can still get a directional move, either upside or downside, but it would tell you that this could be more of a balanced type market and not a big directional market if the volume stays light. And it is Friday, so we want to be a bit more careful anyway. Be a bit more selective on our trades. If we're going to be active, personally, I'm more active in the morning than the afternoon session. So those are really the main ideas. Let's see how well the markets can hold up off the open here. We're testing the 20 half to 22 right now. Pretty important zone. The other markets are testing their respective midpoints right now. So this is a important spot short term for the market. So let's see if this area can hold. If it can, then we can still get some decent movement to the upside. Otherwise, we might be in more of a wider balance. So those are our main ideas. Let's see how well we hold up off the open, and we will take it from there.